Hello everyone from Chicago. I'm Portfolio Manager Charles Brown with CB3 Financial today for StockCharts TV and your Daily 5. We're glad you're with us. We're going to talk about Portfolio Manager styles, if you will, with relative rotation graphs, the RRG function within StockCharts. As I said, we're with CB3 Financial. We're basically a fee-based registered investment advisor. So we're different than many of the advisors here on StockCharts in that we do actually manage money for our own family accounts as well as select clients that like to follow our methodology. You can find out more about us at cb3financial.com. Click the YouTube link at the top and you can see how we manage money. Watch videos there. If you have any questions, feel free to contact us. So where are we right now? As of close of business today, I'm recording this on December 12th. Nasdaq up 38.3, just a tremendous year for the Nasdaq, especially in a pandemic. Obviously, we're pulling out of a recession, but it was a very short-term dip recession. S&P up 15.2, Russell catching up. Russell and Dow Jones were negative for much of the year, and they're now catching up, although the Dow's still lagging pretty badly. But we like to see this improvement in the markets for sure. Our own growth program, SG, CG, and DG are the ones I'm talking about today. CG, capital growth, up about 54.5%. The blue line there, really pleased with that. My best year ever, beating 2013, I think. Our SG program, which is similar, slightly different strategy, almost the same return, which is unusual. Never seen that before. And then DG, diversified growth, which does include some commodities, foreign investments, and all with exchange traded funds, beating the S&P 500 by about twice, so 21 versus 10.5%. So what do we do as a money manager? We look at the tools in StockCharts and we look at ways that we can actually make money for our clients using these tools. So I am not the kind of researcher that some of the other people are on this site. I simply use these tools to make money for our clients. And the place that I start is looking at this 4 indice chart. So if you go back 8 months, it says on the chart is what we're focusing on. The chart actually goes back 12 months, but we're looking at the last 8 months. You can see the Nasdaq has clearly outperformed the other indices. And what we're doing then as a money manager is seeing which of the indices is outperforming the others and benchmarking to that. Now, it's important for you to realize that our internal benchmark is different than our client benchmark. Our internal benchmark is what we're using to push ourselves to get the very best performance that we can. If we set it on the S&P for the internal benchmark this year, it would have been a pretty easy benchmark to hit because the S&P has dramatically underperformed the Nasdaq, and now at the end of the year here, we're seeing the Russell catch up. So you see that black line on there, that's the Russell catching up to the S&P. They're almost neck and neck. Russell actually pulled ahead. And if we go forward here on the second of the 5 charts, just looking at 3 months, the monstrous outperformance from the Russell. And this is important because I believe we are in a secular bull market. I believe this is going to go on for some time. We are investing clients with that mindset, in that we stay 99% invested. We have been the entire year, even in the downturn in March. We did not lighten our equity exposure at all. And we've been waiting for the other asset classes to catch up with the tech sector, the mega cap stocks in the Nasdaq. And we're finally seeing this here at the end of October into November. Look at the dramatic performance. And so we have added, since I did our last video on DG, I alternate here on these Your Daily 5s between our CG program and our DG, but we've added small cap. I'll show you that at the end of the video. But note that performance, because if you're benchmarking to the S&P and your clients are going, well, we're really not keeping up with the market, this is a year where you really need to pay attention to the small caps and the Nasdaq. Looking at the major asset classes versus VBINX is the next thing that I do as a portfolio manager. VBINX is just a general index of 60% equities, 40% bonds. Candidly, we're not anywhere near close 40% bonds in our growth and income program, which I'm not talking about in this program. But if you look here, I used the phrase, and actually was in a video this week with Julius DeCampanaro, the founder of RRGs, and I said, I know you have a better scientific name for this, but I just call them dive bombs. When you have these sectors that, got up into the improving quadrant, which is up here in this light blue shading, and then they just dive bomb back to lagging. What am I seeing that looks interesting on this chart? The only thing I'm seeing is that SPY on the right-hand side, which was in weakening. There was nothing in leading here on the weekly major asset classes, but SPY is turning back up and heading back into the leading quadrant. That tells me we need to stay in equities. All right, so now where are we looking at on the sector map? Okay, so everyone knows that after being down, beaten down, left for dead, off the charts over here is XLE, this huge rotation out of lagging. It looks like it came from the pits of hell down there on the left-hand side, back up into improving. Notice though, that it's almost a straight parabolic north. Now, I have seen this sector dive bomb, using my phrase, back into lagging, and we want to be sure that we don't get too excited about investing very much in XLE and the constituents thereof for the CG and SG programs that do trade individual stocks. I'm also seeing real estate failing, heading back into lagging. XLP, the non high beta sectors, the defensive sectors, are not performing well. I like seeing XLC, that's communications, heading back into leading, and XLF just heading into leading. We'll be adding to that probably in the next go around. Industrials, the farthest to the right on the RS ratio scale, even though they're heading down, they're still beating the S&P, and industrials is a pretty decent size holding for us. So if we look at where we are, how did we get this performance in DG? You'll see I'm happy to show what our blend is. So we just made an update this week. So EEM, we've been in EEM for a while. We added Australia. We liked seeing that heading into leading. EWG German. So this is why we call this diversified growth, because it's not just U.S. stocks. IBB, IWF, and then a 7% holding in IWM. You could argue we were a little late on this, although we've been in this for a week or so, but small caps, frankly, were beaten down for so much time this year. We've got a pretty good record at 21%, and I just, backed in here with a 7% holding. We might add more before the end of the year. IYT, like in the transportations, obviously the FedExes, the UPSs of the world, other trucking companies, still holding a little bit of silver to represent the materials sector, which is still looking pretty good. And then XLC at 9%, industrials, tech still holding a large percent, and then obviously still in healthcare, waiting to see what plays out here as the pandemic starts to wind down, we hope, with the introduction of these vaccines. So that's what we've got here. Just know that the way that we manage money is basically always to look for strength. We're looking for strength in the asset class, and then we're looking for strength in the sectors, and then we're looking for strength in the constituents. I use the tools that are in StockCharts to constantly evaluate those, and it's probably common sense to all of you, but don't ever feel like you need to be in all the sectors or even in most of the sectors. We've had our success this year by using the tools in StockCharts, and many times only we're in 4 to 5 of the 11 sectors. 4 to 5 of the 11 sectors. Now, obviously in DG, we have a little bit more variety here, whereas in SG and CG, each of those is holding 33 stocks at a 3% weighting. That's 99% with 1% in cash. Okay. So if you're looking for more information, please subscribe to our videos on YouTube. Be sure and click the little bell so that you can get reminders when we're going to go live. That's generally Mondays and Thursdays, although I'll be on an abbreviated schedule here during the holidays. Also follow us on Twitter. I tweet regularly. And we just like to be in touch with you. Let us know if this portfolio management with RRGs is useful for you. Again, I'm Charles Brown, Portfolio Manager with CB3 Financial, where we don't just manage your assets, we become one of them. For your Daily 5, we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.